So
Mhm.
any questions, any concerns? We covered trends, we covered support and resistance, we covered market direction, we covered Japanese candlesticks, we covered Fibonacci's, right?
Mhm.
So what questions, what you wanted to ask? Maybe you're having an issue if you was practicing and you was applying something. What questions you have?
All right. So the Fibonacci part of it,
Right?
I need what I need really is to put that in more practice for you to see, or for us to be on something where, let's say I do it and you can tell me, well, yes, because I'm not sure I put in the parameters in the right place.
Right.
Here
So
why?
right,
Um, I'll link up with some other guys and that I
right,
used to do it with, right? So they call in some trades, right?
right,
So they call in the trades, I'm marking it up on the thing, and I pull in the Fibonacci, but I not seeing what they're seeing.
right. So remember, so everybody use a lot of tools differently, right? So I've seen
Mm-hmm.
people, so because for instance, right?
Mm-hmm.
Um, this in front of us here, right? Just this
Mm-hmm.
move here, right? Um, let me this move here from this low here to this high here, right?
Right.
If you're doing fibs and you're doing up fibs, remember we start at the lowest point and then we go to the first
Mm-hmm.
high, two to the left, two to the right. So this here would actually be the first fib, right? The market came back down, the market corrected, and this is how we'd go up, right?
Right.
But now this here is what is the current fib, right? And you would have seen
Right.
that the market probably, and let me actually just spread the fib and you could see, right, the market came down and took this fib out, right? That's why it's not highlighted. Because remember, when it's current with the tool that I'm using is get a color, right?
Right. Okay.
Right. So the market came back down to this area here and took this fib out. Now, on a larger time frame, because this is the 4 hour, on a larger time frame, this same move here, right, is actually A to B, B to C, where
B
this is
to
a
C.
bigger fib, and then the
Right.
market working its way up. So on a larger time frame, you would spread a fib probably like this. And the market came to the 618 and then pushed up, right? So if and that's this is one of the reasons why I tell people in terms of mixing strategies, it could be very dangerous because if the strategies is not strategies that align, you would like one trader would be going one direction because that's the thing about trading. For instance, if I am looking at this and I'm saying, you know what, I want to buy this chart, right? I want to buy
Mm-hmm.
this pair and somebody else is looking at this and saying they wanted to sell this, right? Let's say I bought, I don't want a fib. Let's say I bought right here, and let's say they sold right here. Same position, right? But they
Mm-hmm.
are selling short term because they might be looking at this market coming down right here, which it did, and they would make their profit, right? And I might be looking long term, and the market might come from here and go here and then go up, and then I make my money. So
Right.
even if we took two different trades, right? We both
Mm-hmm.
made money in the markets, right? Just one went against one first and then went up because it will depend on whether we're trading short term, whether we're counter trend trading. Those are some of the factors. So sometimes when somebody is doing one strategy and you are using another strategy, it's kind of going against each other.
Oh.
So that's what you have to be mindful of. So in terms of, I don't know because again, like I don't know, maybe they spread a fib like this, so that's why your fib's not lining up, right? Um, but and that's just the fib part of it. I'm sure it have other rules to the strategies. So
Yeah.
that's what you'll have to be mindful of in terms of what you are seeing and when you are seeing what as the market is moving, right? But the fibs, as I said, if the market is moving down, what we do if this is what we had in front of us here, right? We could see that this market has been falling, right? From the top here, if this is the highest point, we could clearly see that we're going down, right? So I would just start from the top, and as it, I keep forgetting. Um, remind me if I forget again, but I have to send you, and this would make it easier, the link for this software, right?
Right.
Because once you have this software, as I said, you could do the auto fibs for yourself, and you would be able to get to current price much easier,
All right. Now, when you send me that software, Jace, what I need us to do for
right?
me to understand it a little more clearly is like if we could do a Zoom on
Right?
this is what you operating on there, trading view.
No, no, this is the charting, this is the next charting software, not trading view. But it's
Uh-huh.
on Zoom. So we could do that. But one of the features with this, and that's why, like you see, some of the modules actually have homework attached. Right.
Uh-huh.
So what we could do is fine. What I used to let clients do is even if it's not a Zoom meeting, if it's during the week, because what you could do with the software is there's a camera right on the left hand side right here. And if I take a screenshot, basically it captures a screenshot of what I have in front of me.
Okay.
So that
Because
way,
I
if you
just
if you
need
pull up
that.
another chart and you do the
Mhm.
analysis, because I want you to do more than one, so you could
Yeah.
basically do the analysis and just get that analysis to me, and that way I'd
Oh,
be able to see, what we're looking at, what the market is doing, and you just send me the different screenshots, and again, you'd be able to use the different tools. So if you just draw and you say, you know what, I am thinking this market is gonna go up, and then you draw a fibs, you tell me probably where you want to enter, and then that way we'd be able to say, all right, yes, that was a good trade, no, that's not a good trade. And when you
yeah.
save the drawings, you could actually see, all right, you know what, my analysis would have played out, or on this one I would have been wrong, what did I miss? And you'd be able to go
Right.
back to it.
Yeah, that's what I need to do because I'm not feeling secure in myself still
Right.
in analyzing the market. I still am not feeling like if what I'm seeing is really what playing.
Right. So
I
and
still
that's
feel like if
fine.
I'm gambling.
Right, and that's fine because remember you still basically new, right? So and you new especially in terms of learning it and actually applying it and stuff, right? So it is not a case where in a month time, and that's why I do the program how I do it, where I'm doing a minimum of 6 months where we kind of doing it together. So you get to actually apply it. And not just go over the education that I use. So we'd be
Yeah.
looking at, we have two more actual education modules, and then these sessions would kind of change up where we'd be looking for actual trade setups as we go through all the pairs.
All right. Okay.
So you'd get to actually see it applied. So, like again, if we were starting here and we said, you know what, this market has been falling, I would start at the high point, A, B, C to D. And if we watch, and that's what I tell, this is why I trade Fibonacci's, right? So if
Hmm.
this is A, B, and remember I told you I want to enter around the 618, right? It gives you a very
Right.
good entry, right? This trade played out nicely in terms of A, B, C to D. So we had A, B, C618, the extension hit. So you'd have made profit selling, right? AB
Right.
again, same thing. 618, the market came up here, the extension hit. So this was the second trade that played out nicely. And I actually sent out these alerts in the program, right? As you could see, this one
Hmm.
here, the market pushed up. It didn't quite come to the trade two, came down to the 127. And remember, with the Fibonacci's, 127 is an area where the market would also find some hidden support or resistance. In this case, support because the market is
Resistance.
falling, right? So for me, I
Right.
won't be shocked because the market likes to come back deep within the boundary, right? And you see, we have, in terms of within the current boundary, we have this area right here, which lines up with the 618. So it's the previous below and it lines up with the current 618. I would not be surprised if this market pushes up from here to here before it falls. And that's how you would start to think. Once you understand how the Fibonacci's work, right? You would see that the market usually rejects. Look at what this market did here in the first swing. If we break down this same swing, it did exactly what I just spoke about. The market was falling. It formed a B, right?
Right.
And what you call a shallow pullback, meaning it didn't go to the 618 or deeper, right? It pushed to the 127, then pushed back deeper, and then fell. See that pattern where we had this shallow, come to the 127, come back deeper, and then fall. Yes?
So if you had taken the trade on the first one,
Here?
right? You would have gotten the profit going on because it would have met the black to the black, right?
Black to
But
black where? Here?
yeah. So
No, remember.
if you had taken
Remember, there's no black to black, right? Black is the swings, the 0 and 100% of the swings. Remember, the extension starts green to green, blue to blue, any of these red to this red here, right?
okay.
So I would not have taken a trade here because remember, for me, as I said, I wanted to be deeper in the boundary. So I would have been out of this. Could this have just continued to fall from here? Yes, it could. But you will see this pattern that I'm talking about here happening more and more, where just like how with this one here is doing the exact same thing again. If you watch the pattern that I drew on top here, it's doing this exact
Yeah,
same thing. A, B,
correct.
right? We
Yeah,
have a shallow correction, come down to the 127, come back deeper, and then probably fall,
plummet.
right? Because the market didn't find or didn't come to balance. Now, this could, if it breaks this, it could just continue to fall and it'll hit, and we just have an aggressive swing. That happens from time to time. But as you apply more fibs, you would see. So let's look at the bullish or the up move, right? So this bullish move that started here, let's look and see what happened in the bullish move. I could already see this one is going to be taken out. Again, let's do what was taken out first. Deeper correction, a deep correction, and then the market pushed up. This one, because the market was aggressive, shallow, so we didn't have deeper on this one, stalled again where? At the 127 area, went sideways, and then continued to push up. So this one didn't come back down deeper, which is fine, right? It had more momentum in the market, so the market actually just continued bullish. When we start here again now, again, look at this pattern again. Did not complete this swing here. The same pattern I just showed you, but just in reverse, right? Shallow,
Right.
went up, didn't actually complete the swing, came back deeper, and then completed the swing. Right? And the trade, so for us, we wouldn't have taken a trade here. The market came back down. We probably take the second trade, went in, make more profit as the market went up. Remember, the deeper it comes in the boundary, the better risk reward that you have on your trade.
Right. Yeah. Yeah.
Right? So this second trade here, this second trade played out. But again, this one was a fast market. It went straight up and hit, so it didn't come back in. So if we were waiting for this market to come back somewhere here, we wouldn't have been in this trade. So we would have gotten in one trade, no trade on the second swing, right? Or the third swing.
Right.
Well, as the second swing to complete. Third swing again, right? Similarly, this market came back down. It did not come back. So again, and this is just us going on Fibonacci's. Now, could we have gotten in this market? Yes, because if you look, remember, we identified support and resistance areas, right? So if this was
Yeah.
resistance, yes, the market came back shallow, but we just probably know, you know what? If this market is going here, it's going to be a shallow swing because it didn't come deeper, because it probably held here, maybe from a larger time frame. This is a major area that it finally broke. So if that's the case, we're looking to buy this at this area and probably get in. But just based on what, if we're just kind of doing Fibonacci's, no trade again. Second trade here, again, support becoming resistance, resistance becoming support, right? Entry here,
Okay. Yeah.
market went up there. And we could just keep going on and on again. You could see here, same thing, correction. Once we cross that 382 and we start to fall, we'll be looking for some reason for this market to bounce, and that's what the market has been doing.
All right.
Right? Market took out the most recent swing, and we're now bearish. The market now seems to be moving bearish, so that's why we've changed the direction. And that's just based on that. Let me see another pair. If we could just run through another pair. Right. Again, bullish here. And we could see the swings as the market go up. If I just do, right, see the Fibonacci swings?
Yeah.
A, B, C to D, A, B, C to D again went up. Look at this one here. And you see it happens time and time again. And again, with practice, you'd be able to see it better. Again, deep correction. If we entered at the 618, we'd have made profit on trade 1. No entry on trade 2 because it didn't come back to the 618, right?
Right.
Entry again on trade 3. The market went up, fulfill. Entry again on trade 4. Market went up, fulfill. No trade on trade 5 because this one was very aggressive. Trade 6, the market came back to the 5 on this one. We probably would have gotten an entry because 50618 on this one. So probably entry again on this one. The market went up. Trade 2 on this one. No 5 on this one. So maybe no trade for us on this one. And that's if you were just trading at the 618. Again, look here, 618, the market pulled back. If we bought here, we would have been profitable all now.
Okay.
Because we would have entered here.
Yeah.
618. These rejections here, we would have entered here, and the market go up. Most recently, the most recent trade, we would have been up 400 and something pips is this one.
Wow. God, I want to learn this thing so bad, eh?
Yeah, any questions?
No. I think when I start to practice it, Jason,
Right.
I feel I will get a better handle of it.
Right.
I really feel so. Like when I start to put it on and say, well, okay, Jason, am I doing shit here?
Right.
Am I doing the correct thing? You know what I mean?
Understood.
And then talking it through and having it being done on the system and, getting that grasp. I figure I'll be able, I'm seeing what you're saying here and I'm understanding it here. But when I try to look at it by myself, I'm totally lost. Totally lost. So I feel I have to try and do it.
Right.
And for you to tell me, yes, you're doing the correct thing, or no, you're not doing the correct thing. You're not looking at certain things. Because if we traded on the 618, then I have to make sure that I'm doing that, looking for the candles to reach down there, looking for the resistance and those types of things.
Right.
Because even when I pull the Fibonacci now on, let's say, the trading view, I am absolutely lost, Jace.
Understood. And as I say, certain things would come with practice.
Yeah, I feel I had to practice it.
Yeah. So that's next week. What we'll do, I'm going to send you the link to sign up for the software. So that you could start practicing with the software. As I said, the nice thing about it is that it will save all your analysis, everything. You could send me the pictures and we'll do a Zoom where you share the screen and you show me your screen and we could start from scratch, or if you have analysis done already, and we could compare the analysis and get everything going from there.
All right. I appreciate that very much.
Yeah.
I think that's what I need.
No problem at all,
It's a little better.
No worries. Right. So then that's it for tonight's session. I just wanted to kind of answer any questions, anything that you have next week. And the next week, Monday, and the following Monday would be the last two kind of educational topics where we do another topic. And and then we'd kind of just be practicing.
All right, cool.
Yeah.
All right. Thanks a lot, Jace. Appreciate your time.
Have a good night.
You too. Take care. Bye.